Yo, what's good? I think that I need to speak on this. I think it's pretty interesting. Um, so I basically have split the market up into increments, and I'm just tracking volatility more so than like the range on the day. More than like, oh, this is the high, this is the low on the picture, right? Um, More than that, I'm tracking the actual increments inside the range and see how much back and forth action it does. And if it has a bunch of back and forth, like this section here, you can see that it has a lot of back and forth, back and forth, back and forth, back and forth. Um, we would be counting all of that as price movement. And basically, we're looking at what's the price movement um, during this time. And what we see is 25-point zones, just about that big. You see those zones. These are just 25-point movements, okay? 20 on the Nasdaq, 25-point movements, 25-point movements. And then I've divided up in 12.5 movements, which are even smaller, okay? So these are the price lines on the chart that the computer's reading in that's saying, okay, we got 1, 2, 3, 4, 5, 6. You're counting those 12.5s. And then, but what about the 25s, which are these lines? And I've found that so I found that the 12.5 movements um are twice as much as they should. Okay? What I mean is that if it moves, let's say actually I think I just deleted that data. I just deleted it, but on my Excel, but basically what it means is that if there's a 25-point zone or 25-point movement in price, there should be at least two 12.5 movements, right? But there's not. There's four 12.5 movements. That's the difference. So you see a price movement from, oh my gosh, this is on a 1 second chart, so it looks way different. But let's say the bigger movement right here from point A to point B, right? That's a 20, let's say 25-point movement. We would assume that if it moves 25 points one time, it would move 12.5 points twice as much, right? Because 25 is twice as big as a 12.5. But the answer is no, that the 12.5s move twice as much as they should. That means it wiggles around on a 12.5 point basis way more than it in comparison to 25 points. But you're like, well, duh, it moves 12.5 more than 25 points easily because it's less points. But the thing is, we're assuming that's the case. We're assuming that it moves 12.5 points twice as much as 25 points. We assume that. If it moves 25 points, that means it's moved 12.5 points twice. But that's the problem. It's not true. It's four times. What does this mean? It means that the 12.5 movements, you get so much more movement out of it. And if we're mean reverting, if you're algo trading, you're definitely going to be within the smaller confines. If you can have a huge frequency, high frequency of 12.5 movements, because it just moves that much. It just moves that much. It's not obviously when you have a smaller wrist box, you get in and out quicker. But it's not only that, but it's statistically significant that it moves so much more on a small basis, 12.5, than it in relative, even proportionately to the 25-point movements. So what does that mean? It means that if we're going to mean revert, we're probably not going to choose 12.5s. In my opinion, we'd do 25s to get us out of the way. To say you price has to move and it has to put effort in to get us stopped out of a mean reversion trade. As far as trend goes, you're gonna want to go on the smaller time frames. I think and I have this right here. I'll show you. I can tell you right now that I've compared 12.5 zones to 25-point zones. This is 12.5 zones, and you can see just trending the entire day yesterday. You made 242 R and 270 trades. Now, it's not including slippage. It's not including commissions. You're taking 270 trades in a day. Yeah, and it's, I'll tell you right now, there's 2 increments per minute. So you're going to be taking 1 to 2 trades a minute. It's crazy. I know. I'm not going to do that. I don't think I'm going to do that because I don't think I can keep up. But we'll use that as an indicator for our 25-point zones. Okay. So we see that in general, you do not want to mean revert and double down on losers when you're in a smaller time frame like a 12.5 zone. The reason being is that it does move 12.5, 12.5, 12.5 in a row sometimes. And if you add to your position and you trail your stop and you just allow, all right, well, if it stops me out, it stops me out. It goes up in my favor. I add more, and then I bring my stop loss. I'm always risking, the same amount of money. I'm carrying it up. Sometimes it just does not come back to get you stopped out. It keeps on going, and you're able to capture trends. You're able to capture trends a lot more frequently and a lot better in a lot better R per trade than 25-point zones. 25-point zones. So that was 242 R and 270 trades. That's about, let's just call it 0.7 R per trade. Really good expectancy. Now we'll go to 25-point zones, and I'll tell you right now, 80 trades, you make 0 R. Not -1 R, not +1 R. It's actually right on the head. Here is 0 R. It's funny. But 0 R on 80 trades. Well, we don't want to mean revert. We don't want to trend. It's not giving me any edge. Well, I'm not going to be trading the whole day. What we're going to be doing is paying attention to the 12.5 zone, the 12.5 increments. So just back to our chart, if this thing starts wiggling around and increasing 12.5 increment counts, just increasing. There's just so much wiggling around and movement. Could we expect to see, I don't know, could we expect to see a trend form in the 25-point zones? Well, I found that when the last 15 minutes, the increment counts per minute is really high, really high, over 2 increments per minute. That means it trades about 25 points every minute. That's what that means. It could be up and down, 12.5. It could be in one direction, whatever. About 2. So whenever it's above above 2 increments per minute on the 12.5, we are going to trend the 25-point zone. So let's do that. One example. Let's just do one example. I don't know if it even won yet, but here we go. We've got 1353. At 1353, we see that the 12.5 increment counts are popping off. This thing is speeding up. The gas pedal is pushing down to the floor, or pushing down now. We're getting on the highway because, it just went from underneath about 0.6, 0.7 increments per minute. So 0.7, 12.5 lengths per minute to 2. And it stays over 2. So we're definitely going to want to start trending at 1353 till 1425. Let's look at that. 1353 to 1425. Bam. Okay, we're taking those 25-point zones now because we got the inside scoop. We got our reconnaissance Marines going in at the 12.5 levels, and they're going to see, boop, 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 boop. They're going to give us the intel. Hey, what do you got as intel? Oh, you guys got, they're pushing the pedal to the metal now. Okay, we got some movement here. Okay, we're going to turn on trends. Boop. Turn on trends. Green light, good. Green light's a go. Trends are going. Trends are forming, friend. Trends are forming. We're taking whichever direction it goes. Oh, it goes up. I'm going long. Oh, it goes down, up. Oh, I'm going short. Adding to winners, trailing our stop, and guess what we get? Out of 6 trades, we get 26 R. Now, that's one example, okay? That's really, really good edge if that continues. But let's just give it one more example. There was that patch of green here too. So this one in the morning session from 8:41, it was over 2. The increments of 12.5s is over 2. That's speed. I call it speed. That shit is going fast, okay? And when it's going fast, we generally are going to want to take trends on the 25-point zones. That's what I'm thinking. So it goes from 8:41 to 9:23, 8:41 to 9:23, 8:41 to 9:23. Bam. This is what we got. We get 0R in 16 trades. So that one we caught one trend, but overall we couldn't catch a trend. We've got 50%. I mean, what this doesn't show us, I'll tell you right now, what this doesn't show us is are these two. There is, so it for my trends, it has to go 4R in one direction. What this doesn't show us is that we had 2 opportunities. This is so good. We got 2 opportunities, 50-50 chance, right, of going. So if it goes 3R, right, there is a 50-50 chance of it going 4R or coming back to 2R, right? So if we don't get out at 3R, no target, we're trailing. It goes to 3R. At 4R, we make 15R. At 2R, we lose 1R. Okay, that's the power of adding. So if it goes to 3R, we have a 50-50 chance of making 15R. And we had it 3 times during this time. We made one, and then we lost one, and then we lost another. So that's obviously, that's a 50-50 chance, right? If it goes 3R, if it gets to 3R, it's now a 50-50 chance. And it just so happens that it didn't end up going. Trust me, I've already done the math on if it goes 4R in one direction. Now it's unlikely to go 5, right? It's unlikely to go 5 because it just went 4 in one direction, right? It should be coming back at least one, retracing one increment of 1. The answer is no. It's a 50-50 chance. I've already looked at the stats. It shows me. I'm just astonished that it's like that, but it's bullcrap. I thought I could be like, okay, well, it's in a deep trend. It's gone 8R in one direction. I'm going to start betting on that a retracement is coming. I'm just going to do that. And that's easy. I think that would be easy enough. But the answer is that it can keep on going to 12, bro. It's gone 12. No way it can go 13. Oh my gosh, it can, dude. I can't freaking believe it sometimes. It just goes in one direction sometimes, man. It just does. But anyways, my point is that it's a 50-50 chance. We bought ourselves. Okay, we lost nothing that whole time. But commissions, let's call it 1 or 2R. Okay, we lost 2R in that campaign. But we had 3 50-50 chance opportunities of making 15R there. Truly, because it went 3R. Made one of them. That helps us out. If we didn't have that one win, we'd be down 16R. But the point is, when it's more volatile, we get to see that it does end up moving more R in one direction. So it goes 5R in one direction on one trade. It goes 3R in one direction. It goes 3R again there. It goes 2R, right? Those are good things. Those are good things for us. So I'm still liking this system. So that's what we would do. Honestly, it's looking really good, and I don't have to trade 12.5 zones. I know that's really, really fast, but I'll trade my 25-point zones. But I got my reconnaissance missions going on, and they'll tell me what's going on. They'll tell me what the speed of the market is on the smaller increments. And we'll say, well, if the speed is really high, we're going to start opening ourselves up to trends. And I'll tell you what, you wouldn't want to mean revert. You wouldn't want to double down on losers during that time. You wouldn't want to do that. So the contrary is actually better. Now, on the opposite side of things, on the other hand, we see that if it's underneath 1, if the market's in a slow time, could we see that, we mean revert? Maybe. Let's see. I mean, it was just over 2 and 3. when it's moving, but now the car is slowed down. The increments have slowed down. It's gone underneath one increment of 12.5 points per minute. Now what we're going to do is from 10:59 to 12:14 is this example. We're going to start mean reverting on the 25-point zones. So let's say 10:59 to 12:14, 10:59 to 12:14, 10:59 to 12:14. I don't know if this will work. I'm just saying 10:50. What was it? 10:59 to 12:14. I don't know if this will work, I'll be honest. And what happens is that we mean revert, we make 5 trades in a row, make 5R, and then we end up actually capturing a trend and losing. So we'd lose 10R in that sequence. So I don't know if mean reversion is always the answer. Let's give it another shot here. 1310. So we lost 10R there. 1310 to 1338. We make 6R in that one. So now we're down 4. Let's keep going. Is there any time where it goes red? No. The end of the day, power hour just starts getting more volatile. So in the morning session, it also happened to be, before the market opened, it happened to be very, very slow. Could we consider mean reversion during that time? And I do think I've already seen this. I think it does mean revert the entire time. There you go. So you make another 8R there. So overall, that's not conclusive. I would have to have a lot more data on both of these, and I can pull the data every single day. So that's a good thing, and I can back test all the days. So I could put together a little package of the probabilities of this. Yesterday happened to be a trend day. Maybe it's probably true, dude. Yesterday was a trend day, but I would say that if the increment count's not high like this, we simply wouldn't trade it. We would turn off the system until it says to go on. So I do think that there is a protection there. So we'll see. I do want to back test and actually give it, on a percentage basis, like what each month can produce or lose, and like the daily and P&L and the monthly P&L if we were to legitimately do this. I think that would be cool to see. I think it would be cool to see. But I don't know if I can focus the entire day like that. I couldn't. I can give you a morning session from 8 to 12, 4 hours of complete focus. I don't think it's practical to be able to do this all day long. I don't think it's practical. And remember, we're not after, how to get the money is how to be practical too, in my opinion. Because otherwise we can't even hold on to our system that we made, All right. Peace.